Hi, Larry Berman here, and it's Friday the 13th, and who knows what's going to happen on a Friday the 13th. So I'm here behind the camera, focusing in on what I think is the poster child for long-term growth, what Cathie Wood has built at ARK. I'm a huge fan. I've criticized valuation of a lot of these great companies in the past, specifically about a year ago when the bubble was clearly building. So this is a picture of the ARK ETF going back to inception, and I've put in a 4-year linear regression, and this measures the degree of standard deviation from the mean, and we can see that in a bubble environment, we went extreme to the upside, which was where we were about a year ago, and now extreme to the downside. From a long-term trend perspective, many of these great companies that are going to be excellent in 2, 5, 10, 15, 20 years down the road are now really attractive. So when we look at where's the bottom going to be for all these things deflating, and we kind of blow out here, by no means whatsoever is yesterday's price action a strong sign of the bottom, because you could have argued that here and this reversal, and you could have argued that here with this reversal, and here with this reversal, and so forth. So we don't know, but the fundamental value, enterprise to EBITDA, anything you would value one of these companies at that don't have current income. There's very few companies here that are profitable. I heard a webinar she did this week I attended, and they talked about some of these great names, NTLA as an example of a biotherapeutic company. I wrote puts on this for 250, and the premiums were incredible for the next few months. I'm going to earn 10%, and if this stock drops another 30%, I'm going to get to own it while I earn 10% for the next few months. So, what the volatility is what's happening here. This has to be the focus for investors trying to figure out when the oversold condition is going to turn here. And that's why I wanted to focus on it this week. For the first time, I'm now actually buying exposure to this sector because long-term I like it. I started talking about it a few years ago that investors should have exposure here. But when we get into these bubble phases, it makes no sense. You don't need to be there. The risks are too high. So what kind of investor are you? What kind of risk do you want to take? Let's dig a little deeper. Here's one of these meme companies. Ladies and gentlemen, this is a movie theater chain and nothing more. The fact that it did what it did is absolutely stupidity and speculation at its worst and best. Best if you're on the right side of it. Worst if you're trying to follow the herd and get on board and you have no clue what you're doing from a trading perspective. This stock, prior to the ridiculous blow up in 2021 with Gamma and Robinhood, and we know how that ended. This was in a multi-year downtrend where they were questioning the value as a going concern. And obviously COVID with theater shutting down, really crushed it. When we look at fundamentals, there's not a lot of coverage on this, but here's where the street thinks it's worth. On the bull case, I don't know who B. Riley Securities are. You don't have a lot of bulge bracket firms. Not that you need them, but when you look at who's covering this and then what it's worth anywhere from $1 to $16 with a average of 6. This morning it's bid up 15 or 20% because the markets are bouncing. And listen, have fun trading these things. But if you're talking about real investments, AMC is not one of them. But the ARK companies are. So let's go back and have a look at a lot of these names. Now, Tesla, 10 years from now, probably still trading at $700. But for now, I think it could be 400 before it's 1,200. And Kathy might be right one day and it's worth 2,500 or 3,000. But we're paying for that 5 or 10 year outcome today. And so still very expensive as a company, great company, love the technology. I would rather own Volkswagen and GM and NIO if you want to play the EV names and where the car industry is moving to. This is not a tech company. Okay, yeah, batteries and solar panels and all that's kind of getting wrapped into it a little bit. So I get that. But I'm talking about speculation and bubbles and when is the pain going to end here. Let's watch this closely. A lot of great companies here. Many of these still have more downside to go. Be careful, but that's the environment we're living in. As for bull and bear picks of the week, CRISPR Therapeutics looks very interesting to me around these levels. They don't make any money yet, probably not going to turn any free cash flow for a couple more years. But, was it worth 150? No. Could it be worth that much 5 or 10 years from now? Probably. Is it interesting here? Could it go down to 21st before it goes up? Absolutely. But the valuations in these names are getting better. And that's my message this week. Have a great one, everyone.